Hello everybody, this is Toni Turner and welcome to the market now as almost the close, just a few minutes before the close on Friday, April 26th. Well, U.S. stocks came under pressure earlier today. They were hit by weak results from Intel and ExxonMobil. Still, the Commerce Department said gross domestic product rose at a 3.2% annualized rate. That's the good news. A little more not so good news, the report also showed consumer and business spending slowed sharply and investment in home building contracted for a fifth straight quarter. So on that mixed kind of bag of notes, let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely tracks our S&P 500 benchmark index. Now we know that the SPY made an all-time closing high on 200 and, no, let's just call it an all-time high. It was just a few cents. So it made an all-time high at $293.94, $293.94 on September 20th. Of course, that was back in 2018. And today when I captured this chart, the SPY just a few minutes before the close, but it's ready to make a new high here. It was trading at $292.92, or about 29 on the S&P 500, but I believe it looks ready to rise up to 293 and give us a brand new closing high. So we're looking good here. We know the SPY rallied off the December 24th last year rally. We know it made a beautiful V-shaped recovery. It made a low down here on December 24th at $234.27. Then made a really sweet V-shaped recovery. That is kind of a curved trend line there, but you know what I mean. Walking up the 20 and 50-day moving averages. And again, now we're back up to the all-time highs of the S&P 500. So what happened really in the last week or so far this earnings season has produced better earnings than the analysts predicted it would, and that has held the market up very nicely. So we're back up to the all-time highs, just will probably close a little bit above them. In the coming week, we'll see if the SPY can hang on to its current levels and maybe even break above, maybe head up to 294, 295, maybe higher. But to do so, it's going to have to get over these highs. And one would think, if it can't do that, that it would kind of look left with me back on this left side of the chart. Maybe it would reproduce some kind of a sideways consolidation here. Because we remember here that the market corrects through time or price, and sometimes both. And maybe it needs a little time here, maybe a month or two, to consolidate after earnings season, and maybe not. Of course, we'll just have to see what happens. We do have support coming in here at 289, right down in here, right down in there. We have support coming in here. We have more support coming in here at 285 potentially. Of course, the 20-day moving average at 288, that might have a little holding power there. And at the moment, the 50-day moving average is coming in about 283. We do see down here that the 14-day RSI, Relative Strength Index, it has been an overbought, reading for quite some time now. Last week it did climb up and over this 70 line, and today when we captured this chart, it was the RSI was at 71. That's over the 70 line. That means it's very overbought. So we'll have to see if that makes a difference. If we need a little pullback here, we see the MACD, the Moving Average Convergence Divergence Oscillator, moving totally sideways, not rising, which is a very slight here, kind of very slight bearishness. I wouldn't be surprised in the next couple of weeks if we had a little pullback here, as maybe people take some profits as we move through this quarter. So we'll have to see what happens, but you never know until it does. So let's trade what we see, not what we think will happen. Now we can go on to our chart of the Invesco QQQ, symbol QQQ. As you all know, this follows the NASDAQ 100. That's the top top 100 non-financial stocks in the NASDAQ market. The top 5 holdings in the QQQ are Apple, Microsoft, Amazon, Facebook, and Alphabet. Now, and together they represent 43% of the Invesco QQQ holdings. Now, so far, Microsoft, Amazon, Facebook, and Alphabet have come out with really good earnings, and that's been one reason that the QQQ has climbed higher in the last couple of weeks. Apple will come out and report earnings this coming Tuesday, that's April 30th, after the closing bell. So that will definitely influence the QQQ. It's one of the biggest holdings. Now, when I captured the Qs today, it was trading at $190.39. We know, of course, that that's already over the prior closing highs back here on August 29th at 186.74. So the Qs, the big tech stocks, have already broken through their prior highs made in 2018. If we look down here at the RSI on the Qs, we do see that it is very overbought here. It's above the 70 line at 77.40. We'll just call it 77. And that's a pretty big deal. Now, the last time the RSI jumped up above the 70 line, it only took a few days for it to come back down. This time, it's been stretched really, really tight here, and not necessarily on higher volume. So the RSI here is kind of like a rubber band. If it starts down and price starts up or continues higher, that will be what we call a bearish divergence, as price usually follows this particular indicator. It won't do it necessarily right away. It may take a few days, but we'll keep an eye on the RSI. And if it starts to slow down and come back down and the Qs are still moving sideways, or even rising higher, maybe we take some profits off the table if you have any of these big tech stocks in your portfolio. All in all, we'll see what Apple does next week, so stay tuned. It should be pretty exciting. Our last chart here is a chart of the Eck Vectors Gaming ETF, the BGK. Now, the BGK tracks a global gaming index, and the top components in that global gaming index are Las Vegas, Sands Galaxy Entertainment Group, Sands China, Aristocrat Leisure, MGM, and Wynn Resorts. Now, in May of 2018, which you can't see on this chart, the BJK was trading at a relative high of $50.35. Since then, you see that, and that was 2018, as I said, it's fallen in a pretty nasty downtrend and came down on these December 26th lows of 30.81. So it's taken a big hit. Since then, however, it rallied with the market, maybe not quite as far, but it did start back up, move back over its 20 and 50-day moving averages, then started kind of wandering in a trading range here, basically between 36 and 38. And then in March, it started climbing above the 50-day moving average, then started consolidating into the beginning of April, then building kind of a little base on top of a base toward the end of April. Now today, it has recent resistance here at $39.53. When I captured this chart, it was trading at $39.62. So it's trying to break out of this current consolidation. It is not yet overbought. It's a little bit close, but not overbought yet. This is not a day trading ETF. It doesn't have enough volume in it to day trade it, but it's orderly enough that you could use it for a bit of a longer term trade. So it's now sitting, as I said, at $39.62. Above its 20-day moving average, its 200-day moving average, and its 50-day moving average. If it can break out of this consolidation here and continue to move higher in the coming week, and if the market's moving higher in the coming week, I want to trade with the market's direction. It's too hard to trade against it many times. So if it does, if BJK looks good in the coming week, I may add some shares to my portfolio with an initial stop below the 50-day moving average as it closed below the 50-day, and that 50-day is now coming in at $37.67. Of course, if you get into this and you want to tighten up your stop, that may be a good idea. So if the market continues higher next week, you may want to keep an eye on the BJK. And now on to the coming week's economic reports, but first, please join us this coming Monday for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, let us help. During session, we talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may become ripe for high potential trades. Can't attend the live session? Not a problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn more about the market, trade more successfully, and make more money, so please join us. For more information, go to the link on this screen or click on the button below. And now, on to this week's economic reports. But before we start, please remember we are heading into the third week of earnings season, so the market could still be influenced and will be by large cap momentum names and stocks like Apple, so do be careful. On Monday, we have the PCE Price Index. On Tuesday, we have the S&P Case-Shiller Home Price Index, Chicago PMI, and Consumer Confidence. On Wednesday, we have the ADP Employment Change, the ISM Manufacturing Index, crude inventories, and the very important FOMC rate decision. Thursday, we have jobless claims. And Friday we have the jobs numbers, the monthly jobs numbers with the unemployment report and the ISM Service Index. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.